Let's get to Phil LeBeau, who has a very special guest. Hey, Phil.
Hey, Carl. Dave Calhoun. We'll talk about the guidance on the MAX deliveries and production in just a bit, but I have to ask you about the wider than expected loss. A lot of this has to do still with the supply chain and the challenges and the fact that your costs are a little bit higher because you still have to work extensively with your suppliers. Where's the status as far as that system improving?
Well, the gross loss that we've been experiencing over the last couple of years and continuing into this year are still related to a very large pile of rework costs associated with the finished airplanes that we've had in our possession ever since the MAX grounding. So we started with 450. We're now down in the low 200s. We work our way through that. It won't be until those shadow factories that do the rework on those airplanes are shut down toward the end of next year. So we will continue to make progress, but the gross loss is what we have to contend with. And we have to reflect every notice of defect from a supplier in those numbers because we've got to meet the conformance standards that the FAA has.
Why don't the analysts take this into consideration a little bit more, or is it hard for them to game this out?
No, I think they do. Their models all understand this progress, and so I give them credit for doing that. We also had, not to be lost on this, another charge in the first quarter related to the tanker, $200 million. It's a supplier disclosure we made in about the middle of the first quarter, and we're working our way through that and just about through.
Let's talk about the MAX delivery guidance. You keep it at 4 to 450. One reason why the stock is moving higher. Yet we've heard from United, other airlines, customers of yours who have said we're not going to be getting the full complement of MAXs that we thought we would be getting this year. How can you maintain that delivery guidance, even as some of your customers are saying we're going to have to push out when we get certain MAXs?
Yeah. So, Phil, first and foremost, the worst part of the notice of defect that we got is the timing. It hits them right in the center of their summer schedules at their busiest moment. And when we have to defer deliveries through that period of time, it costs some real money. So apologies to everyone. We're working very closely with them. And I think most of what we've had to deal with has already shown up in their scheduling changes. With respect to our annual deliveries, when we gave our guidance, we didn't just assume the supply chain was 100% better on day one. Quite the opposite. We knew we would have to contend with issues over the course of the year. They're getting smaller, they're getting more contained, but that's what happened in this case. So we still believe we're within that guidance. We are clearly going to defer some things from the second quarter and a little bit of the third quarter into the fourth. But on balance, we think we're in pretty good shape to make that guidance.
Dave, Jim's got a question for you. Jim?
Now, Dave, this seems to be the quarter where people are saying, you know what? They have these problems, but I think that their demand is so strong that we have to stick with it no matter what. Can you talk about, rather than, like, say, a 5-day outlook, how about a 5-year outlook on demand?
Well, Jim, it's, it is the right question. We are living in a demand-crazy moment. I think part of it is simply the return of traffic now, the return of China. International traffic continues to accelerate at a fast pace. And the rightful concerns on the part of our airline customers that the supply chain has been constrained and will stay that way. And so the orders now are actually, in many cases, exceeding 5 years of demand. So it is a very robust moment. Our job is to make sure that we're transparent about the constraints that we face and that we don't get too far ahead of ourselves. But yes, it's a very robust market.